Shri, thanks very much for taking out the time. So what's your initial reading of what goes on from here in terms of crude oil prices and whether you see them inching back towards the $76, $77 per barrel mark? Because, you know, there is going to be supply constraints, and that's probably going to lend some support to crude oil prices.
We need to understand first the decision for OPEC to roll over the production cut is very much in line with market expectations. I mean, most of us, like analysts like us, and even the players in the market quite expected this to pan out in the OPEC Plus meeting. So this is clearly not a surprise to the market. Let's try to understand or do a little recap of where fundamentals stand as of today, and then try to, understand what this means to oil prices for the future. There were lots of events, like both bearish and bullish events, which were trying to, shift the balance of the oil market in the last 2 to 3 months. And the key events being a very bearish demand outlook. This was primarily centering around the US-China trade war. And then we had lots of geopolitical issues. Again, primarily, I should highlight the tensions we had between US and Iran. And we also had big growth in US tight oil production. So lots of push and pull factors. And if you need to evaluate them, let's try to understand what happened in June. This is very important to understand the future better. We did, crude prices shed by about like $10 between end May and say mid-June, and primarily coming out, from the bearish demand indicators. There were lots of weak macroeconomic data coming out of US, China, and all that kind of pressured oil prices. Meanwhile, we also had US production growing a lot higher, and this will continue. All these kind of mitigated close to 2.5 million barrels per day of loss from Iran. So we really didn't see a big impact from that. And also, like we had Venezuela going out, like Venezuelan production dropped by about like 400 kbd, but none of that translated into like a big jump in oil prices given these bearish fundamentals. But yes, when the tensions between US and Iran intensified in the latter half of like June, we did see $4-5 jump in crude prices. But then it did not completely reverse the declines what we saw in the first half of June. This clearly, told the market or gave the signal that OPEC needs to roll over the production cut to sustain oil prices in this range. Any increase from OPEC could lead to a collapse in oil prices. So it was pretty much expected, and the decision is no surprise to us or even, many of the players who watch the market closely. It does offer some support. When we look at the fundamentals from now to say the 6 months or 9 months, clearly there will be an increase of about $3 to $4 through the year end. But we should really look for more downside risk, given how bearish the global economy has been doing. Again, we can't deny the fact the geopolitical tensions could put a lot of upside. So we will continue to see the volatility through end this year, depending on how events pan out.
Right. Yeah. Shri, just the other point being, obviously, while you have seen Saudi Arabia and Russia come to this agreement, in June itself, we saw Russia actually, cutting down, reducing oil production by more than what was agreed in the global deal. Do you see that repeating itself? And how does Iran play out in this entire scene?
Okay. Yes, in fact, we think Saudi will probably try to keep production at these levels. Probably Saudi Arabia did all the heavy lifting, right? I mean, they probably did more than, like 500, 600 kbd than the agreement, and probably they will have to continue to do so to keep the market in balance. and some of the other countries will also comply who failed to comply in the last round. So it's pretty much clear. Otherwise, with the US production, like we have about 2 million barrels per day of non-OPEC production, and the OPEC countries will have to comply to the levels they did in the early half to keep the market in balance. And for Iran, we think production will continue or export should continue in that 300, 400 KBD range through the rest of the year.
All right, that is with regards to what's happening to crude oil prices and the move thereabouts. Shri, we'll leave it at that. Thank you so very much for joining us. Really appreciate you taking out the time.